October contained volatility inside of the S&P and led to a fairly tumultuous month. In today's video, I'm going to study both seasonal analysis along with what the sectors are telling us to build a picture of what we think is likely to happen in November inside of the S&P 500. Now, the tools I'll be using in today's video are the Seasonal Analysis Indicator. This is a free indicator available to everyone, along with the utility labels, which you can find if you come to the Market Pulse downloads. Now, both of these indicators, again, are 100% free, and you might want them just to follow along with this video or run the tests in your own markets that you like to trade. Now, starting first with SPY, I'm loading on 20 years worth of data, and the label I want to focus on is this November label. Now, the way to read the label, the first number, that percentage, tells us what percent of the time do we close above where we opened at the beginning of the month. So that would mean 80% of the time, price action to close the end of November is greater or higher than where we are to start the month. So that, to me, paints a pretty bullish picture inside of the S&P for the month of November. We expect a bounce back. Now, December, if we take a look, that trickles down to about 65%, and we can also see that the average gain, that's the second number, is a lot less compared to November. November, 1.88%. So November, if we analyze the other months inside of the S&P 500, is towards the upper end in terms of the average performance. It's outshadowed by just a handful of months, July and April. Outside of that, we can see November is really the third best performing month for the S&P 500. Now, if we narrow this down from 20 years down to just, say, 5 years, which only gives us 5 data points, but we get to see how does this look, at least with the recent 5 years. This idea of November still continues to hold truth to it. So November, overall, we expect to be a somewhat strong month where we find buyers in the S&P 500. That's what the seasonal analysis tells us. Now, another way we could splice this is by taking a look at what the sectors are telling us inside of the S&P 500. So for that, I'm going to load in the utility labels. And here, very clearly, we can see all of the labels across the board are red outside of two labels, XLP and XLU. Every other sector is, in essence, in a stage of deceleration. That's what the red labels mean. Deceleration tells us very clearly that we have a bearish trend. So in terms of seeing where this SPY seasonality might come into the picture, where SPY does start to have this bullish idea, we would expect to see some of these sectors, especially some of the larger weighted sectors, to participate in this overall turn. So you might use some of these labels transitioning from red to what I would imagine to be first orange, and then maybe yellow or green to be your cue in terms of where you're finding the strength specifically inside of the S&P 500. So one more time to recap, we started with our seasonal analysis indicator here, where that gave us the idea of November's being a relatively strong month inside of the S&P. We looked back 20 years worth of data, and in fact, if we take a look at max available as well, we can still see that the overall idea of November being a strong month holds true. So this gives us a reason why we're looking to be buyers inside of the S&P. However, if we look at our sectors, very clearly only two defensive sectors are not in a stage of deceleration, and we would need to see a lot more participation in order for that transition to happen. The way we can see that participation is very clearly by seeing these labels go from a color of red to something that's simply not red, so either orange, yellow, or green, and that gives you an idea of where money is pouring into in terms of sector strength. Take care, everyone. Good luck trading. I hope you found this video useful in learning how to combine the seasonal analysis indicator along with the utility labels indicator to paint a picture inside of your favorite markets.